The Federal Reserve is expected to cut interest rates 25 basis points tomorrow at 2 p.m. Eastern Time. And this is everything that you need to know about it. All I ask you to do is get this video to over 1,000 likes. I'm thinking of hosting a free live stream where we can watch the Federal Reserve cut interest rates, and then Jerome Powell 30 minutes after actually will be going live and answering reporters' questions. If you want to tune on in, again, all I literally ask is to drop a thumbs up and subscribe. But let's go ahead and jump into what we know already. So, what is the expectation? Well, tomorrow, other than the initial claims and continuing claims, tomorrow we do have the Fed rate decision. This is at 2 p.m. Eastern Time, and they're expected to go from 5% to 4.75%. So dropping or cutting interest rates 25 basis points. This is the market's expectation. Now, this is a pretty high expectation. So if the Federal Reserve ends up reporting anything else, then the market might dramatically react. Now, the one thing that I want to remind you is, well, what really changes now, right? This is just a rate cut. We did one about 2 months ago. Why is this one any different? It's because of what is in store for Trump. Trump just won the presidential race. Now, I didn't think too much of this, but it's really important to pay attention to what the Federal Reserve will now or might plan to do now that Trump has specific plans and policies in place when he does his next 4 years. And what do I mean by this? Well, let's go ahead and jump right into it. This is according to CNBC. But the first thing that I want to share with you is, again, there's a very high expectation that the Federal Reserve will stay the course and pretty much just cut interest rates the 25 basis points that the market is expecting. Now, what does preparing for Trump look like? Let me go ahead and zoom on in so you guys can see this. So Trump's agenda. Now, I think that this was very beautifully said. So the tax cuts, the higher spending, the aggressive tariffs come with fruition. For those that do not know, Trump has stated that he expects to cut interest rates during his term. Now, normally when you cut interest rates, or let's say for the lower class, not only just cut interest rates, but you also begin to not tax tips, you begin to not tax overtime. That is more spending dollars for the average American. And what is the average American known for? Well, spending the money that they have. It's just, again, historically in our blood. Now, the way that it is viewed by economists and by the market is the more money they have, the more money they spend. So therefore, if they're spending a lot more money because now they have a lot more money since they're not paying those in taxes due to the tax cut, then therefore that should boost our economy. When you boost our economy and you begin to spend more money, inflation begins to climb back up. So this is a concern, right? Right now, there is a specific course that the Federal Reserve wants to take with the current rate of inflation and with how our current economy is doing. This can completely change when Trump comes into office and begins to implement his policies. It's not to say that it's going to be bad or good. I mean, we don't technically know because these policies have never really been put into place. And I'm all for trying something new because I think that we can all agree with the US $35 trillion in debt, there has to be a new way to be able to subsidize and start to really cut down on that debt. So I hope that we begin to see some improvement, but there is no question that the average American individual will experience this change, right? The higher spending and aggressive tariffs. As many of you guys know, one of Trump's policies is that he expects to be able to pretty much subsidize what the federal government makes in income tax and actually subsidize it with what they can make with tariffs, meaning that they will charge like these import taxes. They're called tariffs, but he likes to position it as, I'm going to make China pay for those tariffs. Technically, it's always passed down to the consumer. And in this case, it's the importer. And then the consumer ends up spending more. But I would be open to this idea. It is expected, according to different articles, and please do your own due diligence. It is expected that if Trump implements these tariffs, where he can add a 70 to 100% tariff increase or fee to these imports, that the average American might spend an additional $4,000 to $6,000 a year. Well, technically that is true based off of the current spending, but that is also not telling you the entire picture. The whole reason that he wants to implement these tariffs is so you don't have to be taxed on federal income tax. So that specific amount that is being taken out of your paycheck, every single paycheck, where you already don't get it, right? It's about, could be as low as 15% maybe, all the way up to 37%. That dollar amount that you already don't get, well, now you would get to keep it. So yeah, you might spend an additional $4,000 to $6,000 a year on food, but guess what? It's $4,000 to $6,000 that you've probably made more than based off of just not being taxed on your income tax. And I would rather be someone that has the kind of just power to decide what I want to spend my money on versus what I don't get to decide where my money gets spent. I just have to pay it to the federal government, right? So there is no question that with implementing these tariffs, it could impact our economy. How will that affect inflation? How will that affect our prices? You have to understand this inflation rate is calculated based off of that CPI data report. And although it just sounds like I'm yapping right now, I want to remind you that with these aggressive tariffs and when inflation is calculated month after month after month, technically it might look like inflation is skyrocketing for the cost of goods sold, right? And yes, technically that would be the case. Inflation rates might begin to go up. So what will the Federal Reserve do there? I would be very intrigued to hear how and what the Federal Reserve would have and put in place to help combat this, right? To help work with possibly Trump and his plan to cut taxes with the possible higher spending and the aggressive tariffs that he plans to put into place during his term. So again, tomorrow, 2 p.m. Eastern Standard Time, 2 hours before the market closes, the Federal Reserve is going to be cutting interest rates, an expectation of 25 basis points. Then 30 minutes after, Jerome Powell, the head of the Federal Reserve, will be going live and answering analyst questions. We're going to be paying attention to what he plans to do with possibly these new policies that should be put in place. But in my guess, he doesn't like to jump the gun. We're not even there yet, right? It's not even January. Trump is not in office yet. So I think he's going to just, again, stay the course, take it meeting by meeting, and focus hopefully in this job report and this job market that we actually just, received last week. I would really love to hear more on what he thinks about one of the worst job reports that we've seen in the past 4 years. That would be my focus, not jump the gun and focus on Trump, because we still don't even know if these policies will be fully put in place by next year. So again, I hope that earned a thumbs up. Please consider subscribing. I hope to see you during tomorrow's Fed rate decision. And if you want to tune on in, all I ask you to do is drop a thumbs up and subscribe. If you want to tune on into my live trading session, you can tune on in now and join LPP for just $1 a day is what it breaks down to with our new discount. And it's the second link in the description down below. Appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, guys.